Hey, it's Sasha Evdokov, and thanks for joining me. In this video, we're going to discuss trading earnings, and we're going to go chart by chart. So this is October 23rd, and in here, what I want to discuss is talking about earnings. Now, if you haven't had a chance to watch my video regarding earnings, go ahead and check it out in the channel, and it's just one I made with my face explaining about earnings, and that'll give you a little bit of insight. But again, to recap, earnings is when the news reports come out for the stock, and it usually happens 4 times a year: January, April, July, and October. And the stocks, they can do anything. Even if earnings are great, the stock can still go down. And if the earnings are bad, the stock can still go up. It's really, it really doesn't matter. You have to watch the reaction of the earnings. The reaction, not just the earnings themselves, but the way the market reacts. So in this video, I want to talk about a couple different plays, and we're going to start with Boeing, mostly because I was trading it here today. And if you take a look at Boeing, it did a phenomenal break over here at that 107.80, and if you got in it, then fantastic, congratulations. You know, I didn't. I missed the move there on that one, and you know, continued higher, consolidated here, and we're looking at the daily. We're trading off the daily. And then here again, earnings came out. Now, if you take a look at earnings, if you wanted to get in this, look at the volume spike here. I'm always talking about volume, and the volume came in was pretty heavy. Now, the thing that I watched was a couple different levels. I watched this level at the open, and then you can see how it tried to hold this region and hold this level at the 127, but also this level. Now, if you got into this stock, I would use this because it gapped here. I would use this just a little under below that as your support level. Now, Boeing, it's a slow mover, and if you didn't get in it right away, you're going to have to give it some room because you just got in it right now and earnings just happened, so you're going to have to be patient. I know that we sometimes get excited, even me as well. I mean, I've had many failed trades myself, and you know, sometimes we get excited and, you know, we get out too quick or we get in too quick, and you have to let things develop and evolve. So sometimes it's, you know, if you're struggling and if you're you know, hesitant, sometimes you just have to close your eyes and pull the trigger if you know it's the right thing to do, and if you plan the trade out before you got in it. But if you're nervous, you got to get those emotions out and you know, get rid of them. Now, I want to talk about CMG. You can see what happened here. Earnings came out. Look at the volume spike here. Fantastic monster run. Okay, it went from 440 to right around 480. I talked about this in my video, and then from there, right when it opened, let's just take a look. Okay, looking at this one here, moving over, okay, right here is when it went. We had a 30-point run from here, 470 to about 510, a 30-point run at earnings, and now the stock continues. It's continuing into strength and continuing, and it's making new highs. So again, look at it right here, the last few ticks. This is what earnings do to companies, and that's why you have to be patient. Now, on the flip side, look at Netflix. Look at what happened to the stock. Earnings were pretty good, but the CEO came out and said the stock might be a little overvalued, and now the stock is tanking. Now, yes, today it's bounced a little bit, but probably all the short sellers that are bouncing it, the volume is pushing it lower. So again, let's take a look at it real briefly. Okay, so looking at it here, earnings came out right here. Okay, stock opened high, and it starts to trend lower. Let me get rid of these here for you. You can see that from here to here, the stock tanked, and it bounced 30-40 points from the previous day's close. So from here, it went from 350-ish, 353, to about 390. And then from 390, it went back and erased all that. That's 30 points, and then went another 30 points. So it's a 60-point run in a day. That's huge, and if you caught that run, oh my goodness, you would have made some great money. Now, of course, we can't catch every single run. It's just very difficult to do, but what earnings does is it allows you to really see the reaction and the action that's happening within the stock. It allows you to reposition yourself. Now, you don't have to get in it right away on that first day. You can get in it on the second day. So take a look at CMG. You didn't have to get in it on the first day. You can get in it on the second day. Look at the third day. Look at what happened the third day right here. Okay, we create this little pattern right there, okay? And it popped higher. And look at that fourth day, continued higher. Okay, so this is what happens. This is what you do when you're watching earnings. You don't play it before earnings. Again, I would liquidate 90 or 100% of your position before earnings. Personally, I would say get out of all of it before earnings because you don't know what's going to happen. It could be like Netflix or it could be like CMG. You don't know. You never know. But what you do have to know is stick to your stops, stick to your rules, and then trade on the action, trade on the behavior, and see what's happening. And then you go large. And you don't have to trade every day. You can trade once a week, and you only need a few good stocks per year to make your year. And then just ride them. You might have to just sit for 3 months. You might have to sit for a couple weeks, you know. Take a look at the Dow Jones. Okay, if we look at the daily, we can see we're in this range. And right now we're pushing up towards this higher level. And we could be, you know, hitting some resistance over here soon or coming into the overbought level. If you take a look at the S&P, again, we're at the highs of ever. I mean, this run, you know, stocks go up and stocks don't go down. They don't go up forever. They make new patterns, they create new chart patterns, they create new support levels, and you have to watch out for topping action. And it takes a couple days for the top to figure out where it's at, and it takes some time, and keep an eye out for them. All right, so I just wanted to share with you some minor thoughts about the earnings plays. Some people are confused regarding earnings. If you don't know how to trade properly, or you're not in the market that long, maybe a couple of years or less than a couple of years, you might better be staying out of the market during earnings season or during the earnings. Check out the websites and see when the earnings come out and when earnings get released, and that way you know when to avoid the trade, so that way you don't get burned like a Netflix, you know, because you never know what's going to happen. Okay, that's my thought, and I hope that you got some insight about trading earnings during this video. I hope that was helpful, and I hope you trade profitably this week. And if you're not trading, then by all means stay in cash. There's nothing wrong with that. But push yourself to get better each and every time. Learn something from each trade, and then you will move on to the next level. That was my insight, and I wish you well, and I know that you can do it. All right, thanks for watching, and if you have any questions, feel free to email me. Feel free to just shoot me a contact form at TRADERSFLY.com. Thanks again.